This is Nightly Business Report with Tyler Matheson and Susie Guerin. Brought to you by...
Sailing through the heart of historic cities and landscapes on a river, you get close to iconic landmarks, to local life, to cultural treasures. Viking River Cruises, exploring the world in comfort.
SAC became, over time, a veritable magnet for market cheaters.
Indicted. The government tightens the net around one of Wall Street's biggest fish, the hedge fund run by billionaire Stephen Cohen. Does the move signal a fresh push to make Wall Street fairer for investors on Main Street?
Corporate America's report card. The halfway mark of earnings season is here. We have the winners, the losers, and a look at the health of the companies you're invested in.
The upside of downsizing. A smaller home, fewer expenses, less debt. It's a way to make your nest egg last longer. But how practical is it really? Our series, How to Not Outlive Your Money, continues tonight. All that and more on Nightly Business Report for Thursday, July 25th.
Good evening, everyone. It's the story the business world is talking about. The federal government indicting one of the largest and most profitable hedge funds in the country, SAC Capital. The firm's founder, Stephen Cohen, was not charged personally, but the multi-billionaire investor has been at the center of this years-long investigation. Now, the criminal indictment alleges that the firm traded in stocks based on confidential information unavailable to the broader investing public. The U.S. Attorney in Manhattan is charging SAC with wire and securities fraud and of permitting a, quote, systemic insider trading scheme to unfold between the years 1999 and 2010.
The scope of illegal trading was deep and it was wide. It spanned more than a decade in time, involved the securities of at least 20 public companies, extended across multiple sectors of the economy, and benefited SAC to the tune of at least hundreds of millions of dollars.
The hedge fund released a statement saying SAC has never encouraged, promoted, or tolerated insider trading and takes its compliance and management obligations seriously. SAC will continue to operate as we work through these matters. Joining us now with more insight about the case and if this means the government is getting serious about clamping down on Wall Street, Tom Ajami. He's managing partner of his own firm, Ajami LLP, which represents investors in high-profile cases of securities and financial fraud. Tom, great to have you here. You know, this story has so much drama and color to it, big egos, big money here. But, prosecutors came down with one very simple statement saying that this is really a case about corporate conduct and corporate responsibility. So as you look at this case, do you think that Wall Street, that the prosecutors have a fresh approach, a fresh strategy to get tough on Wall Street, to really make it fairer for Main Street investors?
Well, it certainly looks that way, and I hope they keep it up. I mean, this is a very important case for a lot of reasons. The main reason is that we need the stock market and the financial markets to be fair and honest, and we need to root out the people who are cheating. That hurts everyone else who's invested through their 401ks or through their pension funds or just individually buying stocks. And so I think the government's on a roll. They've gotten quite a few convictions. Some people have even just pled guilty, just flat out said that they were guilty. And now they're going after the company, and they'll probably go after the big guy himself.
And not just at SAC Capital have these pleas of guilty come out. Other ones like Galleon, Raj Rajaratnam, and other cases as well. The rhetoric that Mr. Barara used today was intense. A veritable magnet for market cheaters. No tolerance for low returns, but high tolerance for questionable conduct. The company seated itself with corrupt traders, empowered by a culture that looked the other way despite the red flags. Simply put, Tom, does the government want SAC Capital to die, and will it succeed?
It does, and I think it's going to succeed, yes. The rhetoric was hard, but I think the United States attorney wouldn't have used those words unless he had some facts backing him up. And when you read the indictment, it's full of information, and it's full of very good facts, sad facts, frankly, of a lot of people at this company just cheating using inside information, doing things that they knew were wrong to get ahead.
All right, so let's say you're right, and SAC, in the end, at the end of the day, does collapse. What does this mean if you're an investor and you have funds with SAC? Will you be able to recoup any of this?
The government said today they're going to work with SAC to try to make an orderly transition of money out of the company and to protect investors. And I'm going to take the government at their word. I think, Tyler, it goes back to what you said. The government wants this institution shut down. It's tired of these companies that are out there just cheating to get ahead and not making profit in an honest way.
We should point out, obviously, that these are allegations. This is the government's claim against SAC Capital. Right. But let me broaden it out a little bit. How rampant, he says, Mr. Bharara, that the trading, insider trading, was rampant at SAC Capital. Yes. He has previously said it's rampant on Wall Street. If I'm an individual investor, do I have a fair shake? Do I have a chance?
Well, those aren't really reassuring words, are they, when he says it's so rampant on the street? You know, I think we do have a chance in certain types of stocks and in certain types of companies. But, you know, clearly guys like Steve Cohen, if they've done what the government alleges he's done, and people at his company have done what the government says they've done, do make it difficult for all of us and make it a very difficult place for us to invest. We need cops like the United States Attorney cleaning up things from time to time.
Real quickly, we've been reporting on this as journalists for years. So have you, Ivan Boesky, Michael Milken, Raj Rajaratnam that Tyler was just talking about, and now this case. Really is... are these government prosecutors going to be able to clean up Wall Street?
They're not going to stop people cheating to make money. That happens every day, and it's going to continue to happen. Unfortunately, there's always going to be bad apples there. But like we need to stop people who rob banks, we need to stop people who sell illegal drugs. You need to have a policeman on the beat stopping these illegal insider traders.
All right. Thank you so much, Chama Ajami of Ajami LLP.
On Wall Street today, the big drama surrounding the indictments did not translate into any kind of big move for stocks one way or the other. Good earnings from the Dow component 3M and the social media stock Facebook were not enough to give the broad market a major push into positive territory. More on those earnings in just a couple of moments. In the end, however, overall, the Dow finished up 13 points, 15,555. Fives are wild on the board there. The NASDAQ gained 25, the S&P 500 up by 4.
Corporate America is now at the halfway mark of earnings season, and today, two well-known companies reported earnings after the closing bell, each with very different stories. Starbucks first beat street estimates and raised its full-year earnings forecast. Results at the world's biggest coffee chain were helped by strong sales in the U.S. Meanwhile, Amazon swung to a loss of 2 cents a share and issued a cautious forecast for the third quarter as the internet company's expansion plans continue to weigh on results.
Well, Susie, today was the single biggest day of earnings reports for companies in the S&P 500, and now more than half the firms in that index have said what they made or lost last quarter. Here to put the numbers in context is John Butters, Senior Earnings Analyst at FactSet. John, welcome back. Good to see you. Simple question. How are we doing?
Well, Tyler, relative to analyst expectations, it's been a very average quarter. We've had over half the companies report earnings at this point in time, and 74% of companies have beat the earnings expectations. Now, that might sound like a high number, but it's actually just a little bit higher than the average over the past 4 years, 73%. And on the revenue side, we've seen 54% of companies beat the sales estimates, and that's a little bit below the average of 58%. However, it's much better than the performance we've seen in recent quarters. In 3 of the past 4 quarters, more companies have missed revenue estimates than beat. So again, a little bit better performance on the revenue side than we've seen in recent quarters.
And let's look ahead, because everybody always looks to see what's the guidance that they hear from company executives. We heard yesterday from Caterpillar, weak guidance going forward. As you look at that, what can we expect for the third quarter, the current quarter, and fourth quarter?
Yeah, if we look at the guidance for the third quarter, right now 49 companies have issued EPS guidance. 39 of those companies have issued negative guidance, so that's a rate of 80%. And that's consistent with what we saw in the previous quarter. We saw a similar number back in Q1, but it's much higher than the long-term average of 62%. And we've seen a lot of negative guidance from companies in the technology sector, and that's one of the sectors we've seen significant cuts to estimates for Q3 at this point in time.
You know, John, if I am a long-term investor as opposed to a trader, what I care about most is not whether a company beats the Wall Street estimate or not on profit or revenue. What I care about is what is the absolute level of growth. So in terms of earnings, how fast are profits growing and how fast are revenues growing?
Well, in terms of earnings and revenue, we're having a fairly weak quarter. On the earnings side, the growth rate is 1.8%. And now that's an improvement over where we were coming into the earnings season at just an expectation of 0.8%. But if we finished at 1.8%, that would represent the third lowest growth we've seen in the past 4 years. And on the revenue side, we're seeing similar growth. That's around 1.2%. And that's a little bit better than we've seen in recent quarters. Over the last 3 or 4 quarters, revenue growth has been spotty. So again, on the earnings side, while we're seeing companies beat on the expectations, the earnings growth is relatively weak at just under 2%.
John, we did say we're at the halfway point, so there's still another half of companies to hear from. A lot of big retailers like Walmart have yet to report. Big oil companies like Exxon. What can we expect to hear from this new wave of earnings?
Yeah, as you mentioned, so coming into the second half of the earnings season, we'll hear from a lot of companies in the energy sector and the utility sector. And then later on in the earnings season, we'll hear from the retailers, and they're such an important barometer for the health of the consumer. We'll certainly keep an eye on what their comments are going forward. The companies in those companies are part of the consumer discretionary sector. That sector is reporting growth of 4% right now. That's the third highest in the index. So again, we'll keep an eye on their performance to see if it moves that growth rate for the consumer discretionary sector.
You know, John, if you got profits growing at 2%, but prices of stocks growing at 20% so far this year, you got to wonder, don't you?
Right, and it could be a case for the markets looking ahead past this quarter to future quarters. As we mentioned for the third quarter, although the growth rates come down, analysts are still looking for just under 6% growth in Q3, and that's expected to jump up to 11.5% in Q4. So it could be a case where really the market's already looking past Q2 and looking for better expectations for earnings through the second half of 2013 and into 2014.
John, thank you very much. John Butters with FactSet.
More earnings to tell you about now in Market Focus, starting with General Motors. GM touching a new 2-year high as its profit topped expectations. North American sales offset losses in Europe, and tracking firms say July sales should be up 15%. By the close, shares had sold off a bit, GM down a fraction to $37 and change. 3M's profits rose 2.5% on growing sales. The company raised its full-year guidance and also increased its stock buyback plan by $1.5 billion. And 3M execs told investors they'll be pursuing acquisitions to grow faster. 3M shares added a quarter higher to $16.55. Quarterly earnings tumbled 17% at Bristol-Myers Squibb. The company blamed it on the loss of patent protection on its one-time blockbuster Plavix, as well as a slow launch of a new blood thinner developed with Pfizer. Disappointed investors sold shares. BMY down 1.5% to $43.93.
Celgene, on the other hand, was a strong performer, raising its outlook on stronger sales of its multiple myeloma treatment, reporting increased profit and revenues. Investors boosted shares there by 3.5%. They closed at $140.65. And many investors took a second look at Facebook's mobile strategy after those blowout earnings we told you about yesterday. Facebook shares traded at 10 times the normal volume today and hit levels last seen the week of its IPO 15 months ago. At day's end, Facebook shares were up almost 30% on the day to close at $34.36.
It's being called the largest hacking fraud case in history. Prosecutors indicted Russian hackers today for stealing at least 160 million credit card numbers from institutions ranging from JCPenney to the NASDAQ, resulting in losses of hundreds of millions of dollars. Andrea Day reports.
This type of crime is really the cutting edge of financial fraud.
It's the largest hacking and data breach scheme ever prosecuted in the United States.
They targeted some of the largest companies in the world, stealing millions of credit and debit card numbers and causing hundreds of millions of dollars in losses to their victims.
The 5 alleged Russian hackers using sophisticated software and breaking into major institutions like NASDAQ, Dow Jones, and JetBlue Airlines. 17 companies compromised, 3 alone left with at least $300 million in damages.
The individuals charged and arrested in this case are the ones at the top, the ones who steal the data that they sell to the folks who cash out. We believe we have taken a major step toward dismantling this organization.
Prosecutors say the alleged hackers were so relentless, they would spend months at a time trying to break into a company's computer system, working around the clock to steal credit and debit card numbers and reams of personal information. They would then sell the information on the black market.
Charging $10 for an American credit card number, $50 for a European credit card number, and $15 for Canadian credit card numbers. He even offered quantity discounts and discounts for repeat customers.
And they were brazen. Law enforcement intercepting text messages between the suspects. In this one, after they hacked into the NASDAQ stock market, the hacker texts its co-conspirator. NASDAQ is owned.
I think this prosecution also demonstrates that while the hackers are persistent and patient, so are we.
For Nightly Business Report, I'm Andrea Day.
More trouble for the embattled smartphone maker BlackBerry. The company's laid off about 250 people at its headquarters in Waterloo, Ontario, as part of its move to trim costs. Last month, BlackBerry reported weak quarterly results as sales of its much-hyped line of new smartphones came in well below expectations.
Still ahead on the program, the benefits of downsizing. Is it the best option for most retirees looking to stretch their savings? We'll get an answer to that as we continue our series, How to Not Outlive Your Money. But first, here's a look at how the international markets closed today.
The fifth home builder to go public this year began trading today. WCI Commodities, which develops luxury residential communities and homes in coastal Florida, made its debut with a whimper. Shares finished the day just fractionally higher from its IPO price of $15 a share.
A different builder, Pulte, got pummeled today. The nation's second largest home builder reported earnings that missed analysts' expectations, selling far fewer units than expected. Meanwhile, D.R. Horton reported better than expected profits, thanks to higher home prices. But it did say rising mortgage rates contributed to increased cancellations and a drop-off in traffic in June. And that's a trend that's worrying investors. Looking at how the stocks did today, Pulte fell 10%, D.R. Horton off by 8%.
Builders like Pulte, D.R. Horton, and others say that buyers increasingly demand greater energy efficiency, but those same consumers worry about the price of those innovations. What's more, in valuing a home, appraisers and banks don't always give due credit for going green. That may be about to change with new legislation in Congress. Diana Olick has the story.
Solar panels, tankless hot water heaters, and extra insulation can save homeowners hundreds of dollars a month on their energy bills. Now, Senator Johnny Isakson has co-sponsored a bill to have lenders factor those savings in when figuring a mortgage.
It's about energy efficiency, it's about savings, it's about increasing the borrowing power of the borrower. I think it's a win-win proposition for the industry.
The bipartisan SAVE Act does two things. It requires lenders to factor the energy savings in a home into how much a borrower can afford for the monthly mortgage payment, essentially subtracting the savings in the energy bill from the borrower's overall monthly expenses. It also tells lenders to add the value of expected energy savings to the value of the home in the appraisal. Since mortgage amounts are based on a percentage of the value of the home, this would allow borrowers to get a bigger mortgage. And that's where homeowners like Tamara Lyons, who already have green technology, will be able to make more money when they sell. The value of green will be in the appraisal.
A lot of my neighbors feel that it's too much of an initial investment and they don't want to put that money down. But if they see that it's going to add to the value of their home for resale purposes, I think it would definitely make the idea more sexy and more appealing.
It would also help companies that are investing heavily in green products like Dow, Home Depot, Whirlpool, and insulation manufacturers, not to mention, of course, solar.
And this would give manufacturers, retailers, builders, and retrofit companies all an opportunity to begin reaching consumers to say, if you take advantage, you put these products in, you can have an expanded value for your home.
This would only be for loans bought or backed by the federal government, but that's about 90% of the market today. The hope is to get the big banks all on board and make green technology as hot as those solar panels are right now. For Nightly Business Report, I'm Diana Olick in Washington.
For retirees who still have a mortgage and a house to maintain, downsizing can reduce one of their largest monthly expenses. That could help them stretch their retirement budget at a crucial time. Sharon Epperson explores the benefits of downsizing as we continue our special series, How to Not Outlive Your Money.
John and Carol Roeder had visited Florida beaches many times, but when they calculated the cost of living there, they eventually decided to leave New York and relocate.
Financially, I mean, Florida is a very easy place to live. You know, there's no, well, first of all, there's a no income tax state. That's number one. But number two, living arrangements down here and the cost of living down here is a lot less than it is in New York.
We still live the way we lived in New York. It's just easier. It's just we go out when we want. We go out for dinners and we travel and all of that. It's fine. It's just it's like living on vacation. It's just easy.
The couple, who are both 69, had already downsized once, from an 80-year-old home to a new condo in suburban New York. Then in 2010, they moved into their vacation condo in Florida permanently. John, a retired hospital administrator, and Carol, a retired psychologist, have significantly reduced their debt and now live more comfortably on a fixed income.
We had no mortgage. We own our car.
Right.
You know, it's so, you know.
Yeah,
yeah. And we just this year, we remodeled the kitchen and 2 bathrooms in this place, so, you know, we're fine.
When it comes to stretching their retirement dollars, financial advisors say downsizing is often overlooked by retirees who become very attached to their family home, their neighborhood, and their lifestyle.
If you're trying to downsize right where you are and just change life and make it less expensive, oftentimes it would have the appearance that life was better when you were working than when you were retired.
But for some people, it's the most practical and affordable option.
That there are many folks out there who are feeling the pressure, having not made a whole lot of money in the market over the course of the last decade or so. They feel like they're behind in their retirement savings. For them, it may feel like a need that they have to downsize. But what I encourage people to do is to think about it more as an adventure.
That's how the Roeders see it. For this couple, moving to Florida began another fulfilling chapter in their lives. For Nightly Business Report, I'm Sharon Epperson.
For more on downsizing, log on to our website, nbr.com. And tomorrow, Sharon will wrap up our series with a look at whether starting an encore career is a smart way to not outlive your money.
Still ahead, Amazon wants to be a major player in the big business of grocery delivery. How does it measure up? We put the service to the test. But first, how the commodities, treasuries, and currency markets perform today. To Detroit now, where the tunnel that connects the city to Canada has followed the municipality into bankruptcy. American Roads, the operator of the Detroit-Windsor Tunnel, cited $830 million in debt and declining traffic. The company said the restructuring is not the result of the recent Detroit bankruptcy filing, but that the city's financial problems and the decline in population contributed to the tunnel's unmanageable debt burden.
Well, one thing that is working for Detroit is the auto industry. And today, Consumer Reports is calling the 2014 Chevy Impala the best new sedan and one of the best cars it's ever tested. Only 2 cars now have a better score than General Motors' newly redesigned Impala. It's the Tesla Model S hatchback and the BMW 135i Coupe. And you can read more about our story on our website, nbr.com. Now, early in the program, we told you about Amazon's quarterly results, and a few weeks ago, we told you about the online retailer's move into the big business of fresh groceries. Tonight, Jane Wells puts all that service to test.
Groceries are a $650 billion business, but it's one category that has not been a big hit online yet.
Everybody wants bacon. Let me start with that.
Now Amazon, the 800-pound gorilla of internet retail, is joining a growing food fight, expanding a fresh grocery delivery business it's had in Seattle to parts of Los Angeles.
If you think about a $650 billion market, 10% of that is $65 billion. So it would, even that piece alone would be one of the biggest categories in retail.
7:08. The key to success is showing up on time.
7:45.
My order was set to be delivered between 7 and 8 a.m.
7:51.
Amazon's LA experiment is only for Prime members who must pay $299 a year for the service. Everything was in order with my order, plus some free water.
I don't even remember ordering these.
Amazon may not be making money on this yet, but the point may be to get people to stop going to the store for anything.
Amazon is a company that is perfectly happy to operate at slim operating margins. They really want to drive volume and drive market share and make customers happy.
Rivals like Yummy.com have been growing in Los Angeles. Yummy guarantees delivery in 30 minutes, a tight turnaround Amazon can't meet. But Yummy's CEO says no grocery chain should sit idly by.
We think that if they ignore the threat of Amazon and Amazon Fresh, it's not that they're going to lose 50% of their sales. It's that they risk losing the 5 to 10% of their sales that make them profitable.
All of this is happening a decade after Webvan so spectacularly failed in the dot-com bubble, back before people used smartphones, broadband, or were comfortable putting credit card numbers on the internet. A dozen years later, times have changed, and whatever happened to Webvan? Amazon bought the domain name. For Nightly Business Report, Jane Wells, Los Angeles.
I like that Jane Wells had bacon and Oreo cookies there in her order. I've used these services. They're pretty doggone good, but I did a documentary some time ago about the grocery business. It's about a 1.5% margin. It is a very, very tough competitive business.
I still like going down the aisles and
I do too.
smelling the cantaloupe before I buy it. That's Nightly Business Report for tonight. I'm Susie Garib. Thanks for joining us.
And I'm Tyler Matheson. Thanks from me as well. Everybody have a great evening. We'll see you here tomorrow.
Nightly Business Report has been brought to you by
Sailing through the heart of historic cities and landscapes on a river, you get close to iconic landmarks, to local life, to cultural treasures. Viking River Cruises, exploring the world in comfort.
I'm Susie Garib with the Nightly Business Report News Brief. The federal government indicting one of the largest and most profitable hedge funds in the country on insider trading charges, SAC Capital. The firm's founder, Stephen Cohen, was not charged personally, but the multi-billionaire investor has been at the center of the years-long investigation. On Wall Street today was the biggest single day of earnings reports for companies in the S&P 500. The Dow rose 13 points, the Nasdaq gained 25, the S&P up 4 points. Facebook shares soared 30% as investors took a second look at its mobile strategy after blowout earnings yesterday. And the 2014 Chevy Impala is the best new sedan. Consumer Report says it's one of the best cars it's ever tested. Be sure to tune into Nightly Business Report right here on your public television station.